An operating agreement is an agreement for the members of your LLC that explains how the LLC will be managed both financially and operationally. Your operating agreement also spells out how much of the LLC each member owns. You can have one member who owns 100%. You can have two members with a 50-50 split, a 60-40, or 70-30 split, anything really. Or you can have three or more members and split the ownership any way that you'd like. The LLC is a flexible business structure. There's no limit on the number of members that you can have, and there are no restrictions on how you split the ownership of the company. Unlike your LLC formation documents, the operating agreement does not need to be mailed anywhere. You don't need to mail to the state, and you don't need to mail to the IRS. It's strictly an internal document. This means you'll just need to keep a copy with your business and LLC documents. The purpose of your operating agreement is to spell out who the members are and what percentage of the LLC they own, also known as their membership interest. It also defines how the LLC is managed, how taxes are paid, and how profits and losses are distributed amongst the members. Remember, your LLC can be owned by one person, called a single-member LLC, or your LLC can be owned by two or more people, called a multi-member LLC. In order to complete your operating agreement, you will need to have some basic information handy. The formation date of your LLC, the name and address of the registered office and the registered agent, the general business purpose of the LLC, members' percentages of ownership, and the names of the members and their addresses. And don't worry, your final operating agreement is not set in stone. You can make changes as needed. That's one of the benefits of an LLC, is the flexibility of managing your business. The operating agreement is a working document that is meant to be fluid and allow for changes as your business grows. If you want to make simple changes, such as change of address for a member or changing your registered agent or your registered office, you just need to revise the original operating agreement and sign it. If, however, you need to make complex changes like one member purchases the interest of another member, or you decide to raise financing with investors, it's best to hire an attorney, because making changes like that can have negative legal and tax consequences if done incorrectly. Once all the changes are made, you'll need to print out the new operating agreement and again, have all the members sign it. It's also best practice to keep a copy of all versions of your operating agreement so that you have a history of the changes that were made. You may need to provide a copy of your operating agreement to a lender if you're obtaining financing, a title company if you're purchasing real estate, accounting and tax professionals for financial assistance, lawyers for legal advice, and potential investors or partners who have an interest in your business. If you're involved in a legal battle, the court will likely ask for your LLC's operating agreement too. Having one can help prove to the court that you have a legitimate LLC and that you're running your business properly. If the courts were to find you running an LLC without an operating agreement, they may go after your personal assets. So you may be asking yourself, where can I get a copy of an operating agreement? Unfortunately, none of the states provide an operating agreement, but you have a few options. You can pay an attorney $200 to $500 an hour to draft one. Try martindale.com or lawyers.com. You can buy one from a website between $50 and $100. See myllcoperatingagreement.com or lawdepot.com. You can write one yourself and fill out a template. The cost should be minimal. Try docracy.com or nolo.com. Or you can use the one that we provide so you can customize it to fit your business.